RupiaPaisa.com, an introduction. Incorporated in 2009, RupiaPaisa.com is an authorized channel partner of multiple banks and NBFC, which offer a comprehensive gamut of financial services for customers ranging from corporate to domestic services. Within a short span of time, RupiaPaisa.com has established in the market because of its consumer-driven investment and financial services. The company has an experienced team of financial professionals who first understand the inside of market behavior, market strategies, and then guide customers through every stage of implementation to help customers finalize the plan of action accordingly. RupiaPaisa.com is India's fastest emerging financial aggregator and distributor and helps customers to make smart financial choices from a wide range of financial products by providing a perfect one-stop marketplace for various types of loans. The prime focus of RupiaPaisa.com is customer satisfaction. It is the most vital policy of the company to serve its clients. We are proud to have a team of experienced professionals from finance industry which helped us to build a long-lasting relationship with our clientele due to our highly esteemed services. Services at RupiaPaisa.com. Headquartered at Delhi, the company offers a wide range of financial services, including all types of loans, investments, life and general insurance, SME funding, information and guidance in matters relevant to investment, equities, loan against movable and immovable properties, etc. Furthermore, the company has tie-ups with leading banks and is a distributor to prestigious financial institutions also. We're just not an online offer comparison site. While we do give you the most thorough scope of alternatives which best suits one's requirement, we strongly believe that financial services are not like e-commerce or web-based businesses where products are standardized. We identify your requirement and get you the best possible loan to meet your personal or professional requirements. Every borrower has a novel money-related position and necessity. Hence, we have a dedicated team of professionals to advise you the best possible products of various banks and assist you to choose a bank or NBFC, complete documentation required as per their norms, answer banks or NBFC query on your behalf, ensure disbursal to your account. RupiaPaisa.com believes in developing long-lasting relationship and enhances the investment procedure through best possible solutions, regular newsletters, support manuals with updated information. Our expertise: loans, business loans, unsecured loan against property, debt consolidation, home loans, professional loans, loan against car receivables, auto loan, working capital finance. We organize loans and working capital finance for self-employed customers to meet their short-term or long-term working capital needs and their expansion projects. RupiaPaisa.com is a financial servicing company dedicated to provide customer satisfaction to the optimum level. It offers excellent support and guidance to its patrons. RupiaPaisa.com takes care of every minute details, right from client names, contact details, follow-ups, notes, customized reports, integrated database, and much more. The team of our professionals uses an internal information technology application for its various services. Why choose RupiaPaisa.com? First, dedicated specialist. We at RupiaPaisa.com introduce ourselves as financial consultants having a team of experienced professionals working with the banking industry. We arrange secured and unsecured loans from various banks, do financial planning, which helps the customer to understand his future needs and work towards common objective. Second, one-stop solution. RupiaPaisa.com provides you one-stop solutions for all your financial needs, such as business loan, personal loans, loan against property, home loans, professional loan, that is, for chartered accountants, doctors, and other professionals. We provide you an unbiased platform to analyze and decide upon best available deals in the market. We understand individual requirements and provide suitable finance advice to our valued clients. So, whether it's your dream home, holiday, marriage, business, or your dream venture, trust, we can always get funds arranged in a quick and hassle-free manner. Third, success stories. The prime focus of RupiaPaisa.com is customer satisfaction. It is the most vital policy of the company to serve its clients, exceeding their expectations. Due to its highly esteemed services, the company has been able to build up long-lasting relationship with its clientele. A comparison with DSA. RupiaPaisa.com versus other DSA. Today, everyone, directly or indirectly, is getting a number of calls from various telesales executives who disturb and peep into your privacy. Therefore, TRAI has given an option to get registered to DND and non-DND option, where people registered with DND option will not get unsolicited calls, but after these registration also, calls are not stopping. People also face following problems. First, unnecessary spam calls from telemarketers who do not follow proper telemarketing etiquette. Second, bad experience with the DSA who applies in multiple banks without confirming. Third, unable to decide how to identify authorized DSA. Fourth, lack of complete information while telemarketers elaborating the products. There are many unprofessional DSA and freelancers who claim to be a DSA. They don't have thorough knowledge of products offered by banks, and they are not able to analyze eligibility criteria of different banks. When they collect documents from customers, they approach various banks and process their application without identifying need and eligibility, and finally end up spoiling the image of authorized DSAs. But all DSAs should not be treated alike. Lack of knowledge is always dangerous, and less knowledge is more dangerous. To identify correct channel partner is the most important task. Checklist is as follows. First, background and experience of DSA. Second, association of DSA with banks or NBFC. Third, if we can find out common connect, etc. Fourth, apply through DSA who tries to sell his services, or choose RupiaPaisa.com, which is an authorized channel partner of various banks with 15 plus years vintage in this field, having dedicated team of professionals who are CA, ex-bankers, etc. There are certain ethics and code of conducts specified by banks and NBFC, which we strictly abide by and ensure the same is being practiced by following team members also. Regular training and updates are being conducted by bank or NBFC at regular intervals so that the team can be well aware of products, ethics of sales, change in policies, etc. IBA, India Bank Association, a voluntary association of banks in India, has issued a model code of conduct for the DSA while operating as an agent of banks and NBFC. J. Paul Getty said, and I quote, "Money is like manure. You have to spread it around or it smells." Roles and responsibility of DSA. Direct selling agents or DSA are professionals hired by banks or other financial institutions who bring business to bank or NBFC through their various financial products. DSAs are hired because no bank or NBFC wants to directly bear the cost by employees on fixed salary to market their products. With rapidly growing rivalry in the lending business, the banks or NBFC have appointed DSA who take all initiative to generate leads through various mediums and get a customer base for various financial commodities such as loans, credit cards, etc. The responsibility and function of a DSA in any of banks or NBFC are similar to that of banks itself, although there are certain specific requirements of any banks or NBFC before hiring any DSA. Therefore, DSA agreement is made by specified banks or NBFC elaborating various terms and conditions and code of conduct, which all DSAs have to follow. The basic function of DSA is to find a potential client as per policy specified by different banks or NBFC. The job done by a DSA can be described as: first, hire a team and give training as per product policy specified by banks. Second, find potential customers for various financial services like retail loans, loan against property, and other credit facilities. Third, get all the documents completed required for processing an application along with duly signed application forms. Fourth, verify all details and documents and give assurance by doing ROSV, which is original seen and verified, on all documents. Fifth, submit the application with all documents to specified bank illustrating brief profile and requirement of customer. Sixth, help credit managers of bank meet the client at their premises or over telephone, where credit people analyze the business and requirement. 7th, after sanction, elaborate all terms and conditions of loan such as loan amount, tenure, rate of interest or ROI, processing fee, and foreclosure charges if any. 8th, if all terms and conditions are acceptable to the client, get the loan agreement signed and the amount disbursed in his or her account. Benefits of having DSA. DSA are professionals who help their clients to make smart choices from various financial products of various banks or NBFCs, which suit their requirement and help them meet their short-term or working capital needs. Following are the benefits of having a trustworthy DSA. First, helps you identify best possible loans or other services which suit your requirements. Example 1. If a businessman is looking for any loan for buying a machinery worth 2 crore rupees and looking for a loan of 1.5 crore and have property to pledge, the DSA helps to identify best option available in loan against property in term of loan to value, best ROI, PF and foreclosure, as LAP is given for maximum 15 years, where burden of EMI will be less. So, customers would end up with good cash reserves which can be utilized for expanding and grooming other business requirements. Second, customers just need to discuss their requirements, and the role of DSA is to help them compare different banks' policies and products and help them meet their requirements. Example 1. If a businessman has turnover of 5 crore and is looking for an unsecured loan of 1.25 crore, then DSA helps them compare the best possible option to fulfill their requirements. In unsecured business loans, any company having turnover of 5 crore can easily get loan amount up to 30 lakhs from single banks or NBFC. To fulfill 1.5 crore requirement, a DSA will have to approach 5 banks or NBFC to meet the requirement. A businessman will never want to directly get involved in approaching different banks and complete all sets of documents separately for them. It is easy to hire a professional who can bargain with all banks and NBFC and complete one's requirements. Third, customers who approach any banks or NBFC through any authorized DSA are easy to be addressed in banks, as DSA does all due diligence according to different banks or NBFC policy and eligibility norms. Example, all banks or NBFCs have several product policies, such as if a case is not eligible under Verified Income Program, then borrower can avail credit facility under various surrogate programs. Every bank or NBFC has different ROIs. There are 40+ banks and NBFC dealing in loan products. So, the role of DSA is to identify eligibility of customers as per their norms, negotiate for best possible amount and rate of interest, and then proceed with the application and get the desired loan if agreed upon by the client. Fourth, doorstep services. DSA provides doorstep service to their client from initial stage of discussion, understanding the requirement, helps in identifying best option by comparing different bank policy, doing financial planning which helps to understand his future need and work toward common objective of meeting one's requirement. Fifth, DSAs, after becoming loan advisors, are always there to solve after-sales queries of clients such as arranging loan agreement, repayment schedule, interest certificate, getting TDS refund in NBFC, and always keep updating the combating the difficult journey of entrepreneurship. The entrepreneurship journey can be a difficult and lonely one. You work till midnight and disconnect yourself from your social life. Being focused and tunnel-visioned, there are times when no one believes in you and you need to keep yourself motivated for the sake of your business. Certainly, there are plenty of ways to avoid it if you form your organization and follow a few tips. First, find a community. It is important to connect with people just like you. Building a community with other founders almost always inspires and mitigates loneliness. This can be a physical community or a virtual one. I came across the Tajurba Business Network, which offers a great platform for entrepreneurs not just to network, but also to learn and gain inspiration or even make an impact on other business owners. Second, prioritize your relationship. There's nothing wrong with acquaintances or new friends, but you'll be more satisfied by keeping a core group of friends and investing your time in maintaining those relationships. Too many friends and relationships are useless and often distract you from your goal. Third, co-work. Co-working spaces can be distracting for a business owner sometimes. However, there are certain co-working spaces where you can work alone in a private office, but still amid a variety of other businesses within the same premises. Then you can retreat to work or network or socialize whenever you want. Fourth, become more assertive. Saying no to good and spare time in your life not only makes life comfortable, but also gives you time for your family and close friends. As a busy entrepreneur, you only have so much time to work with, so manage your time accordingly. Fifth, work with a mentor. A mentor guides and inspires whenever we feel dejected. Hence, it's important to talk to your mentor on a regular basis. Also remember to discuss how he has overcome loneliness and balanced a healthy life during his initial phase of entrepreneurship. Sixth, remember who you are. Being authentic is the vital trait of an entrepreneur. Don't ever forget to maintain your individuality amidst the crowd. Your talents and aspirations are different from others. Many times, the insatiable desire to create or innovate is both the blessing and the curse of an entrepreneur. So, stay authentic. Samuel Johnson said, and I quote, "Small debts are like small shot. They are rattling on every side and can scarcely be escaped without a wound. Great debts are like cannon, of loud noise but little danger." 7 Pillars of Business Success. There are 7 pillars of business success that ensure you achieve your goal. During his entrepreneurship journey, an entrepreneur faces many challenges and needs to possess mental strength, empathy, and energy to get through. He needs to make sure that he has all angles covered to mitigate the challenges and make the most of opportunities. Following 7 pillars in every business keep it strong, healthy, and ready to face any challenge. First, marketing. It is essential to understand the needs of the customer and develop a product or service that can meet their requirements. If we could not do so, then making sales would be an uphill struggle. The most profitable small and medium-sized firms often achieve the desired results by focusing on their core product or services and understanding their customers' needs. Ask yourself, how much time do you spend on understanding the needs of your customers? Second, sales. There are many approaches to sales, but one which is so often overlooked is keeping it close to home. Depending on your sector and of course your product or service, it's not just about adding new businesses and contacts to your prospect list. A good place to start is with your existing customer base, identifying why they use your product and looking at what you can do to work with them more. After all, if you've spent time building great relationships, keep close to them and make sure you get the most out of them. As a part of your sales strategy, you should identify the opportunities which are close to home and be able to articulate that you deliver so well that makes you stand out from your competition. Ask yourself, have you got a clear grasp on your sales strategy? Are you developing relationships, regularly quoting feedback, and acting on it? Third, operation. As you grow your business, maintaining the passion, drive, and energy to deliver a great product or service can be a challenge in itself. Ensure you've got the right people to support your growth and you have systems and processes in place to deliver your product. It needs to be both scalable and adaptable to change to give you the best shot of achieving your ambitions. Ask yourself, are the operational systems you have in place fit for purpose and sustainable for growth? Fourth, finance. The income statement and balance sheet of your business reflect the success of your business endeavors. If you don't have responsible bookkeeping, accounting, and tax professionals working for you, that could cost you a lot. Ask yourself, have you hired the best professionals to assist you in maintaining good accounting systems? Fifth, legal. Of course, a few businesses achieve dizzy heights of their ambitions without having a strong hold on their numbers and ensure that they have all the relevant legal coverage to protect them always. Having no financial strategy and inadequate financial controls will act as a serious drag on your performance and put the business at real risk of failure. Too often, cash management is reactive rather than forward-looking. Business owners often assume that growing sales and profitability are the key to success. They're obviously important, but what if the growth causes a huge cash shortfall? It's better to be aware of the implications of a given strategy in advance rather than doing it later. Ask yourself, have you got enough cash or access to funding to continue to thrive and grow your business? And if not, what are you going to do about it? Sixth, human resource. The success of a business depends on how a business owner has maintained his human resources. The HR department has responsibility of determining whether employees are satisfied, not only with their supervisors, but also with job and related duties as well. Since it is difficult to measure satisfaction, HR specialists must carefully do employee surveys, oversee focus groups, and implement an exit interview strategy to determine how the company can improve in relation to its employees. Ask yourself, have you monitored your HR strategies to ensure retention of your employees? Seventh, management. This is about hiring people to effectively accomplish assignments. Some people can self-manage, but not all. The only way your business can grow to the next level is by having talented managers and employees. Ask yourself, have you pondered over how you can enroll efficient managers to your business? George Dennison Prentice said, and I quote, "Some people use one half their ingenuity to get into debt and the other half to avoid paying it." Unquote. What is loan? In simple words, a loan is an amount borrowed by any individual or corporate from any friends, banks, or any financial institution, and, in exchange, interest is being paid on the amount borrowed. The borrower needs to repay the loan amount over a period of time in order to get rid of the loan. There is an agreement between lender and borrower specifying details of loan amount borrowed, tenure of loan taken, and rate of interest on the amount borrowed. If loan is borrowed from any banks or NBFC, they also attract processing fee, which is charged on loan amount borrowed, and pre-closure charges if borrower intends to close the loan before the specified tenure mentioned in agreement. There are typically two types of loan: secured and unsecured loans. Secured loan is one in which some collateral is pledged against the loan taken, and unsecured loan is collateral-free loan, which is being given on the basis of goodwill, repayment history, and financial status of the borrower. In case of defaults, secured loan is easily forfeited against the collateral pledged, and in unsecured loan, the lender doesn't have any option left, rather only knocking the door of courts. Secured loan is therefore given at a lower rate of interest and for longer period, as the chances of default is very low. No one will want to default as it will end up losing its assets. In an unsecured loan, with no collateral or security involved, there is a high risk of default. Therefore, this loan is given for a shorter period and also at a higher rate of interest. Money can be borrowed for various reasons, and for every reason, there is different type of loans offered by bank or NBFC. Type of loan is best elaborated below. Types of loans: unsecured loan and secured loan. Unsecured loan: collateral-free loan, where lender lends you money on the basis of your existing CIBIL score, your association with lender, and after understanding the end use of the loan. Unsecured loan is available at higher rate of interest and shorter tenure, as no collateral is involved. Business loan: as the name suggests, business loan is the loan extended to businessmen or companies for expanding the business or meeting short-term working capital needs. Personal loans: this loan is given to individuals to meet personal financial needs such as planning vacation, wedding expenses, etc. Credit cards: in simple words, this is plastic money which the bank issues to individuals with certain pre-approved limits. This amount can be utilized to pay bills or your purchases. Secured loan: this loan is extended after pledging any collateral such as gold, shares and bonds, property, machinery or vehicles. Loan against property: loan against property or LAP or home equity loans, as the name itself states, is an advance taken against the mortgage of a pre-owned property. Home loan: the loan taken for purpose of purchasing new house is home loan. Car or auto loan: the loan taken for buying a new car or pre-existing car is called auto loan. Machinery loan: for purchase of machinery or equipment which is used for enhancing business productivity. Working capital finance: Working capital loan is a loan that has the purpose of financing everyday operations of a company. It allows the financial gap or time between purchase and cash received from sales. Does loan kill your business? During 15 years of my experience in loan syndication, I have helped more than 10,000 SMEs till date, and I have seen many companies evolving and be able to make great success stories in their business. I have witnessed a few downfalls of business and getting their operation closed. Was it only loan which killed the business? If a loan would have to kill the business, then most of the business would not be in existence. There are many new and established businesses that are making most of their business with additional support of the loan. There are many success stories about businesses achieving milestones with the help of loans from a bank in their business. The most famous example is Shri Dhirubhai Ambani, who established a huge business empire with the help of an initial 1.5 million loan from the bank to start his factory and procure raw material and machinery for his factory. Now, Reliance Industries is a renowned name of trust and success to everyone. No business can deny the fact that loans do not help grow or achieve milestones for businesses. Borrowers only need to be more vigilant and take all the borrowing decisions very carefully after analyzing all benefits and risks involved in taking any loan. When an entrepreneur starts their new business, the only goal in mind is to achieve new heights and to earn a reputation among their competitors in their business. One puts all of one's hard work, time, and money to rise step by step in their business, and healthy cash flow in business plays the most vital role in helping the business to run their operations smoothly. Cash flow has always been in the business system either through own sources, private lenders, friends and family, or any organized lender such as banks or NBFCs. A well-funded business can easily execute its business plan properly and expand accordingly. During expansion or any low time in business, the business owner might feel the need for a loan which can help bridge the working gap and helps running daily operations smoothly, or explore new opportunities to earn more profits in business. But one should know certain limitation at the time of availing any kind of loan, as a loan is the amount you have to pay back with interest to the lender. So borrowing should be done with proper plan after knowing your lender well. Ideally, there are two types of lenders. Private lender. This is an unorganized lender who charges a very high rate of interest and exploits the borrower. Banks or NBFC. These are organized lenders governed by the Reserve Bank of India and offer a comparatively lower rate of interest and have a gamut of the product as per your need and type of business. Here, banks or NBFCs help businesses to maintain healthy cash flow and explore a new opportunity in business. I can assure that businesses who are killed or have failed cannot be only because of the loan. There may be many reasons behind this misfortune, such as misunderstanding their business model, not having adequate profit in business, dependency on others while making any decision, taking a loan without estimating the current financial condition of the business, borrowing too much of loan without understanding the end use of loan, or not using loan borrowed with proper financial planning in business, and, most importantly, not understanding the right type of loan according to business needs. Currently, there are more than 50 plus banks or NBFCs who are there to loan businesses as per their requirements, but the borrower should analyze the loan requirement with their partner, family member, CFO of the company, or any reliable advisor such as rupeapaisa.com, who can help them in having the deep insight of requirements of the loan, purpose of requirements, type of loan as per requirement, the quantum of loan, tenure of the loan, best ROI among all the options available, and the amount of EMI that can be comfortably paid even at the time of uncertain situations in business. If you don't do this activity before applying for a loan, you might end up landing into a mess and will start blaming the decision of taking a loan at the time of downfall in business. It can be understood as if you're driving your car, you have to be alert and vigilant while driving, or any of your negligence will lead you to an accident. Similarly, when you have availed any facility from banks or NBFC, you have to be very particular about your borrowing and end use of the fund along with timely repayment of the loan. Before finalizing any loan requirement, one should necessarily see both aspects of the coin, that is, advantages and disadvantages of loan. Every decision in business has a certain amount of risk, which all business owners should be aware of. This helps to take necessary measures to lower the chances of loss. It is well said that precaution is better than cure. This means if the loan is availed with precaution, you will be able to reach high rise in your business by tapping the new market, bridging your working capital gap in business, expanding to a new location to make a global presence. Thus, you will always have an edge among your competitors. But if you don't have defined end use of the loan, then you will end up paying heavy interest on the loan and lose all your profit in business. You might hamper your creditworthiness and CIBIL score and might have chances of losing your assets too. So, in a nutshell, you have to be honest and vigilant while doing any business transaction, and this will ensure great success in business along with all your business partners, employee, family, and even your bank which support you in achieving your success. Charles Lamb said, and I quote, "The human species, according to the best theory I can form of it, is composed of two distinct races, the men who borrow and the men who lend." Types of loans, target audience, and benefits. There are two types of prospect clients whom we have to identify as our potential clients or target audience. Identifying target audience and having confidence in the product which is to be marketed is very important. If we are not well aware of our product and policy and have not identified our target audience, then we will end up irritating our client and ruining our prospects. Types of prospects. Salaried. Any prospect who is salaried can avail loan on the basis of net take-home salary. Self-employed. Self-employed customers are running their own business. We can target and identify our potential client accordingly. Generally, there are four types of entities who we can say are our target audience. First, sole proprietor. Second, partnership firm. Third, private limited. Fourth, closely held limited or listed company where minimum 51% shareholding is with directors or their family. Types of loans can be determined as per end use of funds, such as for buying home, it is home loan. For buying a car, it is car loan. Types of loans and their benefits are elaborated below. Unsecured business loan. As the name is defining itself, it is a loan taken by an individual or company for expanding their business or fulfilling its short-term working capital needs. The main objective of business loans is to meet urgent needs of funds in a growing business. There can be many reasons to avail a business loan, such as meeting working capital gaps, payment to creditors, purchase of equipment or machinery, grabbing profitable opportunities, opening new offices, or hiring new human resources, and for various other reasons to expand and grow business. In the current economic situation, business loans can be availed in which no collateral or security is required. It allows one to bring more capital in business without affecting current cash flow and ownership of business. These loans are offered on the basis of eligibility and feasibility of a trade. Any type of industry can apply for business loans, whether one is a trader, manufacturer, or an industry. A few benefits of business loan are following. First, customized as per need of industry. Working capital acts as a fuel to every business, and business loan is very helpful in boosting the growth or meeting any type of working capital requirement in a very efficient and effective way. Every business has its uniqueness. Therefore, loan is customized as per specific need of industry. These customized loans can help any business achieve their target with enhanced competitiveness and profitability. For example, in the current market scenario, there are 35 plus banks and NBFC offering business loans. Loan amount varies from 10 lakhs to 1 crore from single bank or NBFC with flexible repayment options. Tenure can be opted from 1 year to 4 years as per repayment capacity or return on investment in business. There is an option of unsecured bond from a few banks and NBFC, where one just needs to pay interest on loan amount utilized. Unsecured OD helps one lower one's EMI burden and enhance their cash flow in business. Second, collateral-free loan. Unsecured business loan is the fastest way to finance one's business with minimal documentation. It supports a wide range of SMEs, such as manufacturers, traders, or service industry, to fulfill their working capital needs without putting personal or business assets on mortgage. Eligibility of loan is calculated on the basis of financials, such as cash flow and creditworthiness. Third, cash flow improvement. Cash flow acts like blood in every business. All businesses need regular inflow and outflow of funds, and when business is on expansion or diversification, there is always a need for funds which would not hamper the current cash flow. Thus, business loans help like a cushion and ensure sustained growth. A well-planned borrowing can take a company to a new height with long-term sustainability. Fourth, competitive rate of interest. As there are multiple banks and NBFCs offering business loans, borrowers have the option to bargain at the best possible rates and tenure. As per the feasibility of the business, for unsecured loans for collateral-free, banks do all scrutinization as per their norms and decide on the approval of the application. Rates in unsecured loan vary from 15% to 23% on reducing balance depending on banks or NBFC and eligibility criteria. Eligibility criteria. In Indian economy, every business has different modes of operations and business models. All banks have different eligibility criteria and product policy for doing all due diligence before deciding any approval for an application received. In general, the following are the factors or conditions which all applicants must meet before applying for a business loan. Nature of business. As per market scenario, all banks or NBFCs highlight certain nature of business which they are comfortable for funding and certain businesses which are marked as negative for funding, such as property dealers, used car dealers, etc. Vintage. Minimum vintage of business should be 2 years with 5 years total experience of co-applicants or borrowers. Turnover. Minimum turnover required to process an application is 1 crore. Profitability. Business should be in profits in last 2 years with minimum cash profit more than 75 lakhs. The turnover and cash profits need to show an upward trend. CIBIL score. A good CIBIL score illustrates creditworthiness of the applicant. Therefore, scores should be generally more than 700. Low CIBIL score cases are considered only if there is a solid and genuine explanation. Ideally, only one check bounce is allowed in any current loan run in the last 12 months. A single instance of EMI bounce lowers the CIBIL score. Ownership. The applicant should have one ownership proof, either residential or business, such as office or factory. This is actually to see the stability of business or applicant. Eligibility calculation of business loans. There are multiple policies of banks or NBFCs under which an application is scrutinized and sanctioned. Income-based. Eligibility methodology is simply based on DSCR, which is debt service coverage ratio. If any loan application is eligible on income or DSCR program, then that customer is valued the most and the application attracts better loan amount as well as best pricing as compared to non-income-based application. Income-based eligibility is calculated based on turnover, cash profit, and monthly obligation. Ideally, eligibility or DSCR, which equals to cash profit or annual obligation, should be more than 1. Maximum loan amount can go up to 1 crore from a single bank and large loan amount can be obtained if applied together with other banks. Eligibility. Eligible loan amount equals cash profit divided by annual obligation. In proprietorship firm, cash profit equals PAT plus depreciation plus interest on loan. Annual obligation equals to monthly EMI plus interest paid by individual against all borrowing from bank or NBFC multiplied by 12. Example 1. A runs a proprietorship firm for 3 years and is into a business of manufacturing plastic chairs. If A fits into all the eligibility criteria discussed above, then we need to know the last 2-year financial details as follows. Turnover as on 31st March 2018 was 2.89 crore. Turnover as on 31st March 2019 is 4 crore. PAT as on 31st March 2018 is 18.1 lakhs. PAT as on 31st March 2019 is 20 lakhs. DEP as on 31st March 2018 is 8 lakhs. DEP as on 31st March 2019 is 6 lakhs. Interest on loan as on 31st March 2018 is 18 lakhs. Interest on loan as on 31st March 2019 is 25 lakhs. Monthly obligation of 4 lakhs including interest on CC of 2 crore. Last 2 years details are taken to see the upward trend in business. If details are showing a downward trend, then there should be a solid reason for considering the application. We should also know current year turnover as on date to see that the entity is showing an upward trend in turnover and will achieve its last audited turnover. A equals 20 plus 6 plus 25 divided by 4 multiplied by 12, which equals to 51 divided by 48, which comes to 1.06. We can fund this customer, but the final loan amount will be decided by approving authority on the basis of previous repayment history and maximum loan amount served in business loans earlier. Ideally, for businesses having turnover of 4 crore, loan amount varies from 15 to 25 lakhs for new customers in unsecured loans. Example 2. A runs a proprietorship firm for 3 years and is into a business of trading chemicals. If A fits into all the eligibility criteria discussed above, then we need to know last 2 years' financial details as follows. Turnover as on 31st March 2018 was 19 crore. Turnover as on 31st March 2019 is 18 crore. PAT as on 31st March 2018 is 60 lakhs. PAT as on 31st March 2019 is 55 lakhs. DEP as on 31st March 2018 is 5 lakhs. DEP as on 31st March 2019 is 8 lakhs. Interest on loan as on 31st March 2018 is 60 lakhs. Interest on loan as on 31st March 2019 is 81 lakhs. Monthly obligation of 15 lakhs including interest on CC of 5 crore. E equals 55 plus 8 plus 81 whole divided by 15 multiplied by 12, which comes to 144 divided by 180, which comes down to 0.80. Ideally, this customer is not eligible under income-based program, but banks may consider this application if any loan EMI is getting closed in next 6 months or if application is eligible under other non-income-based program. In case of partnership firm, if any partnership firm is applying for a loan, then we should know shareholding pattern as 51% of shareholder will come on loan and other partner will give NOC for loan taken up by partnership firm. Cash profit equals PAT plus DEP plus interest on loan plus interest on capital plus partner salary. Eligibility equals cash profit divided by annual obligation. Example 1. X runs a partnership firm having 3 partners. The firm's vintage is 5 years and is manufacturing cable wire. If X fits into all the eligibility criteria discussed above, then we need to know last 2 years' financial details as follows. Turnover as on 31st March 2019 was 18 crore. Turnover as on 31st March 2018 is 19 crore. PAT as on 31st March 2019 is 55 lakhs. PAT as on 31st March 2018 is 60 lakhs. DEP as on 31st March 2019 is 8 lakhs. DEP as on 31st March 2018 is 5 lakhs. Interest on loan as on 31st March 2019 is 81 lakhs. Interest on loan as on 31st March 2018 is 60 lakhs. Interest on capital as on 31st March 2019 is 0 lakh. Interest on capital as on 31st March 2018 is 0 lakh. Partner's salary as on 31st March 2019 is 18 lakhs. Partner's salary non-income based program. For customers who are not getting eligibility under DSCR program due to some reasons but have a very good credit history, fall into all eligibility criteria discussed above and have defined end use of loan which will get them profit, then bank can consider these applications in non-income based program. First, GST program. There is a certain industry margin specified as per industry which is applied on last 12 months turnover as per GST return and eligibility is calculated based on imputed profits. Loan amounts in this program vary from bank to bank. Maximum loan amount is up to 50 lakhs from a single bank. Eligibility calculation. Eligible EMI equals imputed income into FOIR less existing monthly obligation. FOIR 90% is ideally considered. FOIR is fixed obligation to income ratio. FOIR percent equals total debt including proposed EMI divided by income. Imputed income equals latest turnover multiplied by industry margin whole divided by 12. Industry margin. Different banks or NBFC have different industry margin specified as per nature of business, but considering hypothetical situation, industry margin as follows. Service industry is 10%, manufacturing 7.5%, trader 5%. Example 1. Considering the same case illustrated for ABC Private Limited, now after analyzing last 12 months GST turnover, in last 12 months, ABC Private Limited company had achieved 325 crore turnover. Now here is its eligibility. Imputed income equals 325 crore multiplied by 7.5% divided by 12, which equals to 2 crore 3,12,500. Eligible EMI equals imputed income into FOIR minus existing EMI, which is 2,312,500 into 90% less 1 crore equals 82,81,250. 82,81,250 additional EMI X can pay apart from running monthly obligation. Here the same client is eligible for maximum loan under GST program. Banking surrogate. In this program, eligibility is calculated on the basis of ABB, which is average bank balance. After analyzing a 12 months bank statement, the application loan amount is sanctioned. Again, the applicant should meet all the eligibility criteria. Maximum loan amount is up to 40 lakhs under this program. Eligibility calculation is 1/4 of ABB, which equals to proposed EMI. There should be a minimum of 5 credit transactions in a month. Minimum ABB should be 2 lakhs. ABB is calculated on the OB balance available in current account on the 5th, 10th, 15th, 20th, 25th and 30th of every month. We have to take the average of the balance available in account on said particular date. Example: if A is not eligible under income-based program but is ideally maintaining a very healthy bank balance, then he can get the loan on the basis of average bank balance. If ABB is coming to 3 lakhs, then 1/4 of 3 lakhs is 75,000 rupees. That means he can pay EMI of 75,000 rupees in addition to EMI which he is already serving to other banks or NBFC. Additional condition: the applicant should not have availed an unsecured loan in the last 6 months and not more than 6 BL running. Different banks or NBFCs have different policies on ABB. Repayment track record surrogate. Under this program, if any applicant is not eligible under any program but is running a home loan LAP or vehicle loan, then he might get a business loan of maximum 15 lakhs. Eligibility calculation is based simply on a multiplier basis. In HL or LAP, if EMI is paid between 24 to 36 months, the multiplier will be 1.2. If EMI is paid for more than 36 months, then multiplier will be 1.3. Example: A is running a HL of 60 lakhs, in which he had paid 36 installments of 65,000 rupees without any bounce. Then, the eligible proposed EMI is 65,000 into 1.2, which is 78,000 rupees. A can pay EMI of 78,000 rupees against the business loan, but he will get restricted to maximum loan of 15 lakh rupees. In vehicle loan, if EMI is paid between 12 to 24 months, the multiplier will be 1.1. If EMI is paid for more than 24 months, then multiplier will be 1.2. Example: if Ramesh is having a Honda City on loan and have paid 15 EMIs of 38,000 rupees, then eligible proposed EMI for him is 38,000 rupees into 1.1, which equals to 41,800 rupees. So he can avail loan up to 11.56 rupees if rate on the loan is 18%. Documentation required for processing a business loan application for proprietorship concern. Copy of 3 years audited balance sheet, trading and profit and loss accounts with all annexure, ITR, computation of income, tax audit report with annexures. Copy of 1 year bank statement, updated, of all existing current accounts and saving accounts. Copy of PAN card of proprietor. 1 passport-sized photograph of the proprietor. Copy of latest residence electricity bill. Copy of latest office electricity and telephone bill. Copy of all government registrations regarding business, that is, sales tax, GST, services tax, etc. Copy of all repayment schedules of loans and sanctioned letter of running. GST return for the latest 12 months. Co-applicant KYC and photo. List of documents for unsecured loan. Private limited or partnership firm. First, KYC of directors or partners. A. PAN card and address proof of all directors or partners. B. Photograph of all directors or partners. C. All directors or partners last 2 years ITR and computation of income. 2. KYC of firm or company. A. For all, address proof of firm or company, utility bill or bank statement. B. For private limited or limited company, MOA, AOA, PAN card, list of directors and shareholding of company. 3. Registration certificate of the firm or company. CST, VAT, TIN, GST, other registration certificate. 4th. Complete financial of the latest 3 years. ITR computation of income, balance sheet, trading and profit and loss statement. 3 CA CBCD certificate, complete breakup of balance sheet, all points, debtors and creditors list, breakup of all loans and bank balance, director's report and tax audit report, only for private limited or limited company. Fifth, banking. A. Latest 6 months bank statement of OD or CC account along with sanction letter. B. Latest 6 months bank statement of current account. C. Repayment banking of all running loans, if any, for last 6 months. D. Last 6 months saving bank account statement of all directors. 6. Property ownership proof. Latest electricity, water, property tax receipt, sale deed. Any two. 7th. GST return latest for last 12 months. 8th. Total month-wise turnover for the month for which VAT return is not provided. 9th. Repayment schedule for all running loans. Auto loan, business loan, term loan. Loan against property or LAP. LAP or home equity is a loan which anyone can avail after pledging any pre-owned property as collateral to banks or NBFC. In LAP, a borrower can leverage his existing property and can avail maximum loan to value by unlocking the market value of property one already owns. Loan against property rate of interest is lower than other loan as it involves collateral and is secured loan, which reduces the risk of defaults for the lender. In LAP, one can opt for tenure up to 15 years as per convenience of the borrower in repaying the EMI. Hence, it is considered a long-term loan. End use of LAP. End use of LAP is similar to business loan and personal loan, giving the borrower the benefit of lowest rate of interest as compared to the other two. LAP can be obtained for various reasons enumerated below. For self-employed, you can use your loan for the following purposes: business expansion, operation usage, debt reconciliation, purchasing raw materials, making new investments and personal use. For a salaried individual, you can use your loan for the following purposes: mortgage buyout, balance transfer of existing loan, consolidation of debt, managing wedding expenses, new investments, financing education. USP of loan against property. First, lower interest rate. A loan against property is a secured loan, therefore, rate of interest is very low as compared to unsecured loan. Rate of interest in LAP ranges from 9.5% to 13% depending on the kind of property being mortgaged. Self-occupied residential property attracts lower ROI as compared to loan against any industrial property. Every bank or NBFC offers its own rate depending on CIBIL score and internal policy of eligibility criteria. Second, loan to value or LTV. One can get a loan for up to 70% of the market value of the property, which can translate into a sizable amount of funds from a single bank or NBFC. Third, longer repayment period. For LAP being a secured loan, banks or NBFCs have lower lending risk, so they easily give this loan for maximum up to 15 years. Fourth, lower EMIs. As this loan can be taken for longer tenure up to 15 years, this lowers the EMI amount, which will be less as compared to same loan taken on personal loan or business loan. This will release the burden of repayment and will ensure healthy cash flow. Fifth, debt consolidation. This is the most appreciable way to get your multiple debt paid off by getting just one single loan at the lowest rate of interest. Sixth, end-use flexibility. Loan against property can be used for multiple purposes. Seventh, simple documentation. Documentation is as simple as an unsecured loan along with title document of the property which is to be mortgaged. The type of property which can be mortgaged. Property can be kept as collateral and should not have any kind of legal litigation. The property should have a clear title registered in the name of the owner of the property. What are the types of properties for which I can avail a loan against property? You can avail a loan against property for the following: self-occupied residential property, rented residential or commercial property, vacant residential or commercial property, industrial property, schools or hostels, hotel. You cannot avail a loan against property for the following: property outside a city or municipality limit, property with tenants for more than 5 years with no renewed rent agreement, property with structural flaws that requires substantial repairs, property constructed on agricultural land or farmland, illegal properties, property already mortgaged with other banks, residential property used for commercial purposes without approval from competent authority, under construction property except NRP transaction. Advantages of taking a LAP. Advantage of LAP is almost same as business loan with additional advantages as follows. First, big ticket size loan. LAP helps you unlock the value of property documents kept idle in a bank locker. It helps you take high ticket size depending on end use of the loan. LTV can go up to 80% of market value, and the point which needs to be taken care of. Sales and finance. Finance is considered as the heartbeat of a business because finance provides access to the sources which help in manufacturing and merchandising activities. The success of a business largely depends on effective and efficient financial planning. There are 4 main functional areas in any business organization. These are sales, finance, human resource, and IT. All of these areas are indispensable for proper functioning of an organization. Even a layman can understand the importance of finance as a critical resource for every economic entity, be it an individual or a firm. Without financial resources, no economic activity can be brought to fruition. It would not be an overstatement to say that finance is the life heartbeat of all organizations. The work of a financial manager is crucial for healthy functioning of the business. In a survey of CEOs in the US, it was concluded that the most important skill required for future CEOs would be their financial skills. A salesman can bring in leads, but it is finance that can turn those leads into profits and good turnovers. Financing refers to the process of raising funds required for proper working of the business firm. It is imperative to consider all the options which are available to raise finance and employ the one which is the least costly. For any company, the 2 options to collect money are debt and equity. It is common knowledge that getting capital in the form of debt is cheaper. Equity is the owner's money contributed to the firm. Once the firm has acquired money, it is crucial for it to invest this money wisely in terms of physical assets. This process is termed as investment in common business parlance. In order to ensure future growth and survival of the firm, it is important to invest money wisely. Without growth, the firm is dead. Hence, investment seeks to capitalize on various growth opportunities for the company. These can come in the form of establishing new plants and factories, expanding product portfolio, venturing into new markets, coming up with major marketing and promotion campaigns, etc. The finance manager is supposed to have keen business acumen in order to make wise investment decisions. An investment decision is critical as it involves an outlay of large amounts of capital. In addition, once the decision regarding investment is made, it is irreversible. One cannot go back on the investment decision. Does it mean that one should not make new investment decisions? There is an adage in the finance community that there is no bigger risk than taking no risk at all. Thus, proper investment is a must. Post-investment, the firm conducts its operations over the financial year and generates profits or loss. The profit earned can be used in 2 ways. It can be retained in the company and used for future investments and growth, or it can be distributed as dividend. The finance manager has to take this dividend decision as well. Investors of the company contribute to owner's equity with the hope of getting returns on their money invested. Thus, a decision regarding dividend is important to have a satisfied group of owners. The 4th major decision of a finance manager is regarding working capital. Working capital refers to the amount of money required for smooth functioning of the day-to-day business operations. Money is required to ensure the conduct of daily business activities. Even individuals spend money daily so that their activities are not hampered. In daily functioning of the business, petty cash is needed. In addition, from daily sales, the money is generated by the company and it adds up to its financial resources. The inflow and outflow of money does not happen or occur at the same time. Sometimes, the firm will have surplus cash, and there will be times when there is a cash deficit. It is obvious that in case of cash surplus, there is destruction of value due to inflation if the cash is kept idle. Thus, a finance manager has to keep a keen eye on surplus cash and invest it in appropriate avenues so as to generate fruitful returns. In instances when the firm is short of cash, it is again the finance manager's job to arrange money from the cheapest sources of funds. In a nutshell, without proper financial management, the firm cannot thrive, and the managers ought to have a keen appreciation of financial concepts and tools. Thus, finance is regarded as the heartbeat of a business enterprise. The success of an organization largely depends on efficient management of its finances. J.P. Bishop said, and I quote, "Borrowing may do for once, but make it not a custom." Fourth, fluctuating rate of interest. Since this loan is taken for a longer period, banks or NBFCs offer this loan at a floating rate of interest, which means, as per Indian economy or RBI, when there will be increase in repo rate, your ROI will increase, and when repo rate will decrease, your ROI will decrease. Bank ROI is calculated as per MCLR, which can be checked through an online portal, but NBFC ROI is calculated as per their PLR, which cannot be monitored. Here, taking a long-term loan can be a big loss. Eligibility criteria of LAP. Eligibility criteria of LAP is the same as that of business loan and personal loan. Here, in addition, property is involved with the idea of taking maximum loan amount at a better rate of interest. The main factors which decide the eligibility of an applicant are age limit 21 years to 65 years, repaying capacity, substantial earning which establishes the EMI paying capacity, good CIBIL score. CIBIL score shows the creditworthiness of applicants, chances to get maximum loan amount. Multiple applicants and co-applicants can come on loan agreement if property is registered under multiple names, and this also enhances the chance of maximum loan amount. The following factors are primarily taken into consideration by banks to evaluate the eligibility of applicants. First, minimum and maximum age, 21 to 65 years generally. However, multiple co-applicants can be added in case the main applicant is exceeding the age limit. Second, repaying capacity. Repaying capacity can be evaluated as per ITR and bank statements. In salaried case, monthly salary should be 50,000 rupees or more, and in case of self-employed, minimum annual income should be 6 lakh rupees and above. Third, loan tenure. LAP can be offered for maximum up to 20 years, which actually ease the EMI burden on the borrower. Fourth, employment history. For salaried applicants, minimum work experience of 3 years is required. For self-employed, business vintage of minimum 5 years and ITR of 3 years is required. Fifth, LTV. In mortgage loans, LTV is restricted to market value, and this ratio differs by the type of property. For loan against residential property, LTV can go up to 100%. For loan against commercial property, LTV can go up to 70%. For loan against industrial property, LTV can go up to 60%. For any other mortgageable property, LTV is restricted to maximum 50%. Sixth, CIBIL score. A decent CIBIL score decides the creditworthiness of the borrower. Minimum CIBIL score 650 is mandatory to process loan application. Seventh, property approval and documents. Property should be mortgageable and should be free from any litigation. Registered sale deed or conveyance or lease deed, past sale deed chain, each transaction in respect of property since first allotment, latest house tax receipt and approval building plan from municipal corporation. Tips to increase your loan eligibility. Loan against property. Get rid of existing loan obligations. If you're already running any loan which is near to closure, or you can foreclose the loan before applying for any mortgage loan, then you can definitely enhance your chances to get more by increasing your eligibility. Opt for a longer period. This will increase the chances of getting a higher loan amount as EMI burden will be less than any loan taken for lesser tenure. Your income documents suggest your comfortable repaying capacity, and you go for a longer tenure loan and EMI is spread according to tenure. There is an option of part payment which all banks or NBFCs allow up to 25% of principal outstanding in 1 calendar year. This option you can encash to get rid of the loan earlier without having any EMI pressure. Adding multiple co-applicants. In order to increase loan eligibility, you can include other earning members in your family blood relation, such as spouse and parents. This will overall increase the eligibility as income of all co-applicant can support timely repayment of loan. Bank will do the scrutinization of income documents and CIBIL check of all co-applicants before sanctioning of loan. Rental income considered. If applicant or co-applicant are getting any income as rents from any of their property, then adding this rental income will increase the chances of getting more loan amount. Therefore, it is advisable to disclose and inform your rental income to the lender in order to get a higher loan amount. Good CIBIL score. A healthy CIBIL score reflects your creditworthiness and enhances your chances of getting the maximum loan which the borrower is looking for. Before applying for a loan, one should check the CIBIL score, and if the score is as per lender norms, then only one should apply. One should pay all his credit card dues, loan EMI on time to increase the CIBIL score. Wise selection of property to be mortgaged. Bank decides ITV percentage, which is insurance to value percentage, on the type of property which is being pledged. Banks or NBFCs are more comfortable in lending with self-occupied residential property, where they can give a loan up to 100% of valuation, and that too at cheapest rate as compared to other property. Therefore, if you have an option, always try to mortgage your residential property if you are cautious about rates and ITV. List of documents required for LAP application. Identity proof, PAN card, mandatory, and any one of these documents. Voter card, Aadhaar card, valid passport, driving license, photo credit card, photo identity card issued by government body, letter from recognized public authority or public servant after verifying the identity of the customer with photograph, not more than 30 days old. Address proof, any one of these documents. Voter card, Aadhaar card, valid passport, letter from a recognized public authority or public servant after verifying the identity and residence of the customer, latest utility bill, rent agreement on stamp paper, documents issued by government departments of foreign jurisdiction, and letter issued by foreign embassy or mission in India. Proof of income, all the documents given below. Last 6 months salary slip, last 12 months bank statement of salaried account, latest 2 years Form 16 or ITR, other documents related to running loans along with 6 months repayment bank statements. Property documents, all the documents given below. Copy of complete chain of documents of the property as applicable, copy of approved plan if applicable. In case of self-employed application, for proprietorship concern, copy of 3 years audited balance sheet, trading and profit and loss accounts with all annexure, ITR computation of income, tax audit report with annexure. Copy of 1 year bank statement updated of all existing current accounts and saving accounts. Copy of PAN card of proprietor. 1 passport size photograph of the proprietor. Copy of latest residence electricity bill. Copy of latest office electricity and telephone bill. Copy of all government registrations regarding business, that is sales tax, GST, services tax, etc. Copy of all repayment schedules of loans and sanction letter of running. GST return for the last 12 months. Co-applicant KYC and photo. Complete chain of property papers. List of documents for secured loan. Private limited partnership firm. First, KYC of directors or partners. PAN card and address proof of all directors or partners. Photograph of all directors or partners. All directors or partners last 2 years ITR and computation of income. Second, KYC of firm or company. For all, address proof of firm or company, utility bill or bank statement. For private limited or limited, MOA, AOA, PAN card, list of directors and shareholding of company. Third, registration certificate of the firm or company. CST, VAT, TIN, GST, other registration certificate. Fourth, complete financials of the last 3 years. ITR computation of income, balance sheet, trading and profit and loss statement. 3CA CB/CD certificate, complete breakup of balance sheet, all points, debtors and creditors list, breakup of all loans and bank balance. Directors report and tax audit report, only for private limited or limited company. Fifth, banking. Latest 6 months bank statement of OD or CC account along with sanction letter. Latest 6 months bank statement of current account. Repayment banking of all running loans, if any, for last 6 months. Last 6 months saving bank account statements of all directors. Sixth, property ownership proof. Latest electricity, water, property tax receipt, sale deed, any two. Seventh, GST return latest for last 12 months. Eighth, total month-wise turnover for the month for which VAT return is not provided. Ninth, repayment schedule for all running loans, auto loan, business loan, term loan. 10th, chain of property documents which is to be mortgaged. Home loan. Having own house is everyone's dream, and banks or NBFCs, by giving home loan, help to fulfill the dream and encourage the sale and purchase of property with ease. As the price of property is increasing day by day, people can't afford to buy properties doing complete down payment. The main reason is taxation, or no one wants to exhaust all the saving and feel financially insecure at any stage of need or emergency. Here, banks or NBFC helps the borrower fulfill their dream by taking a home loan and paying back in easy installments for tenure up to 30 years. It is a secured loan where property documents remain with the lender till the repayment of loan. Types of home loan. There are various types of home loan as per need and end use, such as home purchase loan. Any loan taken for purchasing a new house is categorized as a home purchase loan. Residential plot purchase. The loan taken for purchasing a plot on which dream house is to be constructed is a type of home loan. Having a self-built house adds to the status symbol as well as gives you high return on the investment over a period of time. Home improvement loan. The loan taken with intention of renovating your existing house, such as repair of home or getting interior and exterior changes of the house. Construction loan. The loan taken for constructing a new house on your existing plot. Home extension loan. The loan taken for adding new room or floor as per your need or for any new member coming to the family. HL balance transfer. You can get your loan outstanding balance transferred to another bank or NBFC in order to get better terms and conditions and lower your rate of interest. Top-up loan. On the basis of existing relationship and timely payment of EMI, banks or NBFCs offer additional loan amount over and above your existing loan. Advantages and disadvantages of home loan. Having your own house is fulfilling your dream and adding more to your status symbol and represents being successful in your society. But having a dream house on loan may have certain pros and cons, which everyone should go through and decide if they are ready to take risk as per their capacity. Advantages of home loan. Sense of accomplishment. There is immense satisfaction of owning a house from your own source of income. It can be considered as an Oscar award for you, which you get as return for all your efforts and hard work done to live this moment. Deciding to buy a house is one of the biggest financial investments one makes, not only because of its sentimental value, but also because of its appreciating market value. Making ownership affordable. For average middle class and salaried people, home loan is like a catalyst which helps them buy. Tax benefits. The Government of India provides certain tax deductions on principal and interest paid on home loans, just to encourage and ensure many of Indian citizens buy their own house. A borrower can claim up to 1.5 lakhs under Section 80C of Income Tax India 1971 Act in a financial year for repayment of principal component. Under Section 24B of Income Tax of India Act, it allows borrowers to claim deduction up to 2 lakhs against the repayment of interest component. The deduction under income tax is applicable only to constructed houses, not on houses under construction. Under Section 80EE, if you are a first-time buyer of any property, then you are eligible to claim additional interest 50,000 rupees every year till you repay the loan. Proper legal check of property. One of the major benefits of taking a home loan is that all the title documents of property are verified by banks or NBFCs at their end, which minimizes or stops any fraud or any litigations related to property. Secondly, you also get to know current market value of the property so that you do not end up being fooled by the dealer and get the best bargain on property before finalizing the deal. You must have seen a Bollywood film Khosla Ka Ghosla, which exactly narrates the dispute of property. If Khosla ji would have taken loan from any banks, he would not have been in trouble. Disadvantages of home loan. Every coin has two aspects, that is, head and tail. While reflecting on advantages of HL, we must also go through disadvantages of home loan as follows. Long-term commitment. When anyone opts for a home loan, generally tenure is 10 to 30 years as per the repaying capacity. For major period of your life, you will be under pressure of this home loan while paying EMIs on time. In any unforeseen condition, delay or default in EMI at any stage of tenure will lower your creditworthiness or CIBIL score. Sales restriction of property. Due to any circumstances, if anyone ends up selling the property within 5 years of buying that property, then whatever deduction has been claimed under Section 80C on the same property will be added to your taxable income in that financial year. Loss of HRA benefits. One of the major disadvantages of having a home loan is loss of HRA tax benefits. HRA stands for House Rent Allowance, which is paid to employees as a part of their salary by the employer. there is a provision of tax benefit on rent expense incurred on rent paid on accommodation during a financial year. There is certain criteria for getting eligible for claiming HRA as tax benefits. If you have your house under construction and you are staying on rent in same city. If you have self-owned house in one city but you are living in another city. If you have own house but staying on rent in same city, HRA tax benefit can be claimed if you establish that your house is far away from your workplace and it is difficult for you to commute daily. In this scenario, tax benefits can be claimed on both home loan and HRA. If you have any rental income on your property, you have to declare in your income tax return, and if no rental income, you have to declare notional rent. So after shifting your house taken on home loan, you are not eligible to claim any HRA tax exemption, but you can enjoy tax benefit on interest and principal paid on home loan. Volatile rate of interest. Since the rate of interest on home loans is floating and tenure of this loan can go up to 30 years, the certainty of fluctuating rate is obvious. Whenever there is a hike in the rate of interest, generally there is an interest in tenure keeping the EMI same, which often shows cases that principal of loan remains same even after paying EMI for more than 3 years. In a few cases, principal outstanding is even more than original loan amount due to fluctuation of ROI irrespective of regular payment of EMI. Tip: one should always check his current rate and compare the best rate available with competitors. If he is getting a better option with a competitor, he should bargain with an existing lender or switch to another option. Home loan in personal name does not attract any foreclosure charges as per RBI guidelines. Opportunity lost. Over the last few years, property market is going through a very bad phase and has given very low return on investment as compared to other classes of investment such as mutual funds, FD, etc. As a home loan is taken for a longer tenure, the EMI paid on loan will not get you much profit as compared to if we would invest the same amount of EMI in other forms of investment. This loss is considered as an opportunity lost. Example: if X is paying 30,000 rupees as EMI for his home loan and ends up paying for 10 years, that means he is paying 3,60,000 rupees annually. If you do regular investment of the same amount for 10 years, you might get a better return as compared to appreciation on property. Eligibility criteria for home loan. Before planning a home loan, one should check eligibility criteria of different banks or NBFCs to ensure approval of the desired loan amount without any hassle. Rejection of your application will waste your valuable time as well as will impact your CIBIL score due to hard inquiries. Therefore, it is very important to check your eligibility at your end and plan your loan amount accordingly. Basic criteria of home loan in India is same as of other loans. Nationality. All Indian residents are eligible to go for a home loan. Under certain schemes, even NRI or PIO are also eligible to take home loans from a few banks or NBFCs. Employment status. Any salaried or self-employed applicant can apply for home loan. Income eligibility. For salaried or self-employed, minimum income as per income tax return should be 6 lakhs or above. FOIR, Fixed Obligation to Income Ratio. After considering all current and proposed fixed obligations in proportion to applicant income, banks decide upon eligibility of loan amount. Generally, the FOIR ratio is considered 50% of income. Example: if any applicant has a monthly income of 1 lakhs, then he can pay 50,000 rupees as EMI to all his loan or credit card bills. The other 50% is for meeting day-to-day expenses of family such as education of kids, grocery expenses, entertainment expenses, etc. Age norms. Age is one of the important factors to assess the eligibility of an applicant. The age of applicant should be minimum 18 years or maximum 70 years at the time of maturity of loan. Applicants with young age can get loans for longer tenure, which ensures more time left to retire from their work. CIBIL score. Good CIBIL score enhances the chance of getting a home loan as no banks or NBFC are comfortable to fund applicants with poor CIBIL score. Minimum CIBIL score should be 650 plus. Employment status and stability. All applicants should have minimum work experience of 3 years and should be income tax assessors to establish income stability of applicant. LTV. As per RBI guidelines, banks fund up to 100% of registry value or 80% of the market value, whichever is lower. 100% of registry value is considered under two circumstances. Market value of property is high compared to registry value, and after giving 100% of registry value, loan is being restricted to 80% of market value. Disbursement is done in two tranches, that is, 80% loan disbursement at time of registry. This loan amount is paid directly to the seller and balance 20% in applicant account for meeting fixture and furnishing expenses after taking possession of property. Property details and valuation. If the applicant is buying a property from any builder, then the builder and its project should be approved by the lender. On any resale transaction, banks or NBFCs get legal and valuation done of the property from their empaneled value to ensure clear title documents of property and decease LTV accordingly. Valuation of property depends on age of property, location of property, government circle rate of property, and on quality of construction of property. Most important factors to be considered at the time of availing home loan. Buying a property is the biggest decision as it takes most of your savings, and here banks help you make your dream come true with a home loan offer and give you a chance of owning a property along with tax benefits. But before having a loan, one should definitely plan a loan in proper planned way, as home loan is a long-term commitment. Here are a few points one should always take into consideration for finalizing a home loan. Analyze your repaying capacity. Taking a loan is easy in this competition between all banks or NBFCs, but we should not take a loan as it is readily available. Rather, we should analyze our repaying capacity according to our income and also take future unforeseen situations into consideration. Golden rule is that a loan should not be more than 50% of your income. All loans including car loan, personal loan and HL. One should also save a minimum 20% of his income for any future emergencies. Opt tenure as short as possible. Lower EMI attracts you to take longer tenure, but longer the tenure, you end up paying higher interest as compared to loan borrowed. If you opt for tenure for 10 years, then you end up paying 57% of the loan amount as interest. If tenure is 20 years, interest will be 128% of original loan amount and 167% of loan amount if you take for 25 years tenure against your home loan. Tips. Initially take longer tenure, but make a point to increase your EMI after every year as per your comfort to lower your tenure to get rid of the loan ASAP. Secondly, there is a part payment option with all banks and NBFCs without any charges, which means you can lower your tenure keeping the same EMI. You can pay up to 20% of principal outstanding in a financial year and get your loan closed before the opted tenure. Timely payment of EMI. When you sign a loan agreement, you're making a commitment to pay EMI on a specified due date without any fail, and you have to ensure that you keep your bank account sufficiently funded before the due date of EMI. Failure of EMI on due date due to insufficient fund will definitely attract bounce charges, overdue charges, and will also hamper your CIBIL score. This will impact your creditworthiness as well as it will lower your chances of taking any facility from banks or NBFC for any of your financial needs. Insurance on your loan. It is very much advisable to take insurance to cover your loan amount sufficiently. Generally, people avoid taking insurance on loan, but insurance on long-term loan safeguards your investment and also protects your family in any unforeseen emergency. If the loan is sufficiently covered by insurance and if anything happens to you, your property will remain with the nominee and he/she will not have to pay any EMI toward the loan. Lender will recover the loan outstanding from the insurance company and give you back the original title deed of property along with the NOC of loan. Keep close watch on rate of interest. In long-term loan, rate is generally on floating, which means rate of interest will keep on fluctuating as per market scenario or bank's policies. One should always check the current rate of interest on an existing loan periodically and also should negotiate for a better rate option with the current lender or with other banks or NBFC. RBI has given nil foreclosure facility on home loan, which means if you are getting a better rate maintain CIBIL score more than 750 plus. The higher the CIBIL score, the more chances of getting the desired loan amount as a good CIBIL score improves your credit worthiness and indicates your high repaying capacity. One should check his CIBIL score before applying for a loan. Have adequate insurance cover. Today, banks or NBFCs have started giving importance to insurance coverage of applicants. Applicants with sufficient insurance coverage clearly show how good the borrower is at financial planning, and in such cases, there are least chances of defaults. So banks are comfortable giving higher loan amounts to such applications. You can also ask for insurance covering your life and loan amount to safeguard your family in any such loss. Documents required for home loan. For salaried, identity proof, PAN card mandatory, and any of the following documents: voter card, Aadhaar card, valid passport. Address proof, any of these documents: voter card, Aadhaar card, valid passport, letter from a recognized public authority or public servant verifying the identity and residence of the customer. Latest utility bill, rent agreement on stamp paper. Proof of income, all the documents given below. Last 6 months salary slip, last 12 months bank statement of salaried account, latest 2-year Form 16 or ITR. Other documents related to running loans along with 6 months repayment bank statements. Property documents, all the documents given below. Copy of complete chain of documents of the property, as applicable. Copy of approved plan, if applicable. Agreement to sell between buyer and seller. Own contribution receipt. In case of self-employed application, for proprietorship concern, copy of 3 years audited balance sheet, trading and profit and loss accounts with all annexure, ITR computation of income, tax audit report with annexure. Copy of 1-year bank statement updated of all existing current accounts and saving accounts. Copy of PAN card of proprietor. 1 passport size photograph of the proprietor. Copy of latest residence electricity bill. Copy of latest office electricity and telephone bill. Copy of all government registrations regarding business, that is, sales tax, GST, services tax, etc. Copy of all repayment schedules of loans and sanctioned letters of running. GST return for the last 12 months. Co-applicant KYC and photo. Complete chain of property papers. Agreement to sell between buyer and seller. Own contribution receipt. List of document for private limited or partnership firm. KYC of directors or partners. PAN card and address proof of all directors or partners. Photograph of all directors or partners. All directors or partners last 2 years ITR and computation of income. 2. KYC of firm, company, firm. For all, address proof of firm or company, utility bill or bank statement. For private limited or limited, MOA, AOA, PAN card, list of directors and shareholding of company. Third, registration certificate of the firm or company, CST or VAT or TIN or GST, other registration certificate. Fourth, complete financials of last 3 years, ITR computation of income, balance sheet, trading and profit and loss statement. 3 CA or CB or CD certificate, complete breakup of balance sheet, all points, debtors and creditors list, breakup of all loans and bank balance. Directors report and tax audit report, only for private limited, limited company. Fifth, banking. Latest 6 months bank statement of OD or CC account along with sanction letter. Latest 6 months bank statement of current account. Repayment banking of all running loans, if any, for last 6 months. Last 6 months savings bank account statements for all directors. Sixth, property ownership proof. Latest electricity or water or property tax receipt or sale deed, any two. Seventh, GST return latest for last 12 months. Eighth, total month-wise turnover for the month for which VAT return is not provided. Ninth, repayment schedule for all running loans, auto loan, business loan or term loan. 10th, chain of property documents which is to be mortgaged. 11th, agreement to sell between buyer and seller. 12th, own contribution receipt. Working capital loan. Firstly, we need to understand working capital and its mechanism. Working capital is the fund which almost every business needs for meeting their day-to-day business needs that helps in taking care of all recurring expenses such as salaries, wages, rent, electricity, etc. In simple calculation, working capital is obtained by subtracting current liability from current assets, and this ratio helps in establishing financial health of the business. Current assets can be described as follows. First, cash and cash equivalents such as cash in hand, advance payment, petty cash, balance in current account, and any other type which can be easily converted to cash. Second, payment from debtors which is supposed to realize against the sale done on credit. Third, stocks and inventories which include raw material, finished goods and work in progress, and, in routine, a business holds to maintain smooth operation of business. Release of payment once sale of finished goods is done. Fourth, any marketable security which can be easily converted into cash at the time of requirement, such as fixed deposits, mutual fund or shares of any company. Fifth, prepaid expenses which are done in advance for goods or services which have to be done later during the period, such as advance payment of rent or paying insurance. Importance of loans in Indian economy. The financial development of a country relies upon expansion and growth of industries in the nation. When industries grow, it helps all business divisions to boom respectively. A financially developed economy encourages the business to achieve development by making funds obtainable to them. The arrangement of funds to industry, banks or NBFC act as a bridge between borrower and investors. For banks, investment comes in the form of saving accounts, fixed deposits, recurring deposits, investment in form of mutual funds, insurance, etc. from all its branches, along with private equity and certain financiers. NBFC investments come in the form of private equity and investment in the form of mutual funds and FD, etc. When industries and businesses require any investment, they approach banks and NBFC and demand loans for meeting their working capital needs. Banks or NBFC, after analyzing certain parameters such as business model of borrower, financials, repayment history, DSCR, CIBIL score, obligations, end use of funds, and foremost, any previous association with bank or NBFC. Loan plays a very vital role in stabilizing an economy, that is, controlling inflation and deflation. During inflation, when there is an increase in prices of goods and services, it is termed as inflation. It changes the ratio of money towards goods and services. There are three types of inflation. First, demand pull inflation. When aggregate demand of a product or services rapidly increases but is not able to supply as per demand, then seller increases the price of products or services. It is demand pull inflation. This generally occurs when the economy is growing faster. Second, cost push inflation. When there is increase in price of inputs such as labors, raw material, etc., which leads to higher cost of production. Increase in cost of production decreases the supply, but demand of product remains the same. Increases in production cost are passed to consumers, which leads to cost push inflation. To control the situation, RBI increases the interest on loan and deposits, which diminishes the borrowing of loans and increases the amounts of deposits in banks or NBFC. By taking these measures, circulation of money is reduced and thus inflation can be controlled. Third, during deflation. When there is a decrease in the general price level of goods and services, it is called deflation. This occurs when the rate of inflation falls below 0%. Deflation indicates deteriorating conditions such as low productivity levels of goods and services and significant unemployment. Causes of deflation. First, increased productivity. When there is increase in production efficiency due to innovation and new technology, this leads to drop in prices of goods and services. Second, decrease in currency supply. When currency supply decreases, it also decreases the price of goods and services, which increases the affordability. Third, change in structure of the capital market. When many different companies sell the same product or services, there will be cutthroat competition, which will lower the prices to compete in the market. To control this situation, RBI lowers the rate of interest so that consumers start more investment using the borrowed money. It encourages investment in properties and expansion of business as people are attracted to take loans, which eventually contribute to the growth of the economy. Overall, we understand banks lend their surplus money after meeting all their statutory liability. They earn profit in the form of interest, which helps them to meet their operational cost to run the bank. Government also borrows money from the RBI to meet its budget deficit through short-term treasury bill. Hence, loan and credit act as fuel to sustain the economic growth. Organ Nash said, and I quote, "Some debts are fun when you're acquiring them, but none are fun when you set about retiring them." Advantages and disadvantages of loan. Banks are offering various types of loan as per one's need. It is the simplest way to raise funds to meet personal or business requirements and pay back in easy installment. Every borrower should evaluate every aspect of availing of loan, such as end use of loan, security involved, if any, quantum of loan, best ROI available, and which banks or NBFC they should opt for, as there is high competition in the market. There are certain pros and cons which every borrower must go through before finalizing the loan amount. Advantages of loans. First, boost your growth. Bank loans act as fuel, which helps you boost your growth, especially for private and public sector companies. In today's fast-growing economy, where almost every business is short of enough cash flow for meeting their short-term or long-term working capital need, expansion of business is the only option left in this cutthroat competitive market. Here, banks stand as your finance partner to fund your business to ensure your growth. Example: suppose if any company is on expansion mode and wants to purchase a new factory to increase its production, here it can approach bank and ask a loan for purchasing new factory, new machinery, etc., which the company will pay back in easy installments. The bank loan will accelerate its growth without affecting its daily operation cost. Second, working capital for daily operations. Banks offer special kinds of loans to companies with the purpose of financing everyday operation of companies. This helps companies to be flexible with their debtors and creditors, as the bank is there to bridge this gap. Example: suppose Company A buys its raw material from Company B worth 1 lakh rupees to facilitate the production. As per agreement, Company A needs to pay back in 30 days to Company B. After production, Company A sells the finished good in the market for 1,50,000 rupees with payment term of 60 days. In this situation, Company A can borrow 1 lakh rupees from its banks and repay back once payment is recovered. The advantage of this kind of loan is that Company A just have to bear interest cost for the amount utilized and for the number of days utilized. Third, purchase without liquidity. Earlier, it was very difficult for salaried class people to buy a car or home of his choice. It was very tough for businessmen to expand exponentially with their own fund, as businesses always consume lots of investment and people are always short of ready cash. Here, a bank loan helps businessmen expand their business by purchasing new units, buying machinery required to expand, and also opening offices or factories at other locations to capture the global market. The borrower can borrow a loan from the bank as per his repaying capacity, income documents, and creditworthiness. Fourth, better rate of interest. If we remember, in early 90s, people used to borrow money from unorganized money lenders such as local zamindars, pawn stores, jewelers, etc. Here, most borrowers were exploited by lenders as they used to charge very high rate of interest and demand for abnormal collateral. With the rise of organized lenders such as banks and NBFC, this trouble has almost vanished. Fifth, flexibility. Despite being a cheaper and systematic repayment option, it also offers flexible tenure, which turns out to be very beneficial to borrowers in the long term. Borrower can choose the amount of EMI and duration of loan as per his repaying capacity. Here, the borrower can bargain with banks or NBFC on loan amount, rate of interest, and tenure. Example: if any individual or business wants to take loan from bank or NBFC, they can bargain on loan amount they want to avail, rate of interest by comparing different bank ROI on same product, and tenure according to their repaying capacity. If anyone wants to avail home loan, he or she can go for 10 years, 15 years, 20 years or 35 years option as per his repayment capacity and convenience. Sixth, tax advantage. Whatever loan we take, we need to pay interest as per agreement mutually agreed upon by lender and borrower. The interest component, which is paid to bank or NBFC, is being paid from already taxable income. Individuals can take this tax benefit in form of tax saving. In business, the interest paid to banks is booked under financial cost, which the business has incurred during expansion and operation of business. The interest given to the bank is part of profit, and there is no tax on interest paid to banks as it is booked under expense. Seventh, ownership remain with borrower. Bank loan is always a great source of funding for companies from ownership point of view. If any business wants to raise any funds for expansion or to meet working capital need, Numerous alternatives such as private equity, venture capital, etc. are available. An individual will have to give some part of his ownership share, whereas in bank loans, one can raise funds as per need and return back the amount in stipulated time and retain the ownership and enjoy all the benefits of profits. 8th, cash discount. In business, most people get a cash discount if payment is made instantly to creditors for the goods purchased, and one can enjoy this benefit only when the business has sufficient funds in account to pay. Here, bank loan acts as a catalyst and supports a business for such opportunities. It also adds to your goodwill in front of creditors and competition. But before availing any loan, one should calculate profits after analyzing cost of funds after taking bank interest into consideration. Disadvantages of loans. First, low approval ratio. In most of the cases, approval ratio is very low as banks and NBFCs have certain policy and impact of unforeseen circumstances on MSME. We are witnessing a global pandemic due to COVID-19, which is very furiously impacting the global economy. Since mid of March 2020, India has undergone through complete lockdown and almost all major sectors contributing to the Indian economy are hugely impacted. We can say the Indian economy is going under a big recession, even worse than that of 2008, 2009 and others. Somehow India survived the 2008-9 recession because of the parallel cash economy, but this time the situation is not in control of anyone, neither government nor corporate. It is actually a helpless situation where we only want God to press the reboot button and get all of us out of this situation as soon as possible and keep all our near and dear ones safe and sound. Almost all MSMEs and other big corporations have been adversely affected since the lockdown was announced to combat and control the spread of COVID-19 cases in India. The government has classified the businesses as essential and non-essential services, and only the former was allowed to operate while the latter was completely shut down. Approximately 130 million Indians have already lost their jobs till April 2020. Many have had pay cuts and many more are likely to lose their jobs in the coming months. Industries that are highly impacted in this global pandemic are aviation and tourism, automobile, hospitality, NBFCs, consumer durables, and garment sector, and these industries are likely to witness slowdown till the end of March 2021 and will definitely take more time to revive. Industries which are least affected are drugs and pharmaceutical firms, agri-commodities, FMCG, healthcare, digital business, and insurance sector. Even when businesses will be allowed to operate after the lockdown, they will face a huge deficit in the supply of raw material. Supply chain is badly affected in this crisis, and most shortage of labor due to flight of migrant labor in reinitiating the business. The biggest fear in the mind of all business owners in this lockdown is going to be the burden of repayment of existing loans, collection of payment from debtors, and paying the same to the creditors. This payment cycle will be adversely disrupted if anyone in this chain has its payment stuck. There is the fixed liability of salaries, EMI, interest on the limit, and other necessary operating costs, even when there is hardly any source of income and no certainty as when the business will get back on track. According to an expert study, 25 to 30% of highly impacted businesses will die and will be declared bankrupt. Now, the biggest challenge is to analyze the crisis and save the businesses from getting bankrupt. The Government of India pushed RBI to allow a moratorium on all existing loans till August 2020 for all borrowers. This decision was taken to safeguard all borrowers who might not be able to bear the burden of EMI or interest when their business is completely shut down during the pandemic. Now it is very important to help all businesses to get back on track as from September onward. There will be the challenge of getting repayment of existing loans regularized. Furthermore, the government has announced 20 lakh crores package to help India get out of this corona crisis very soon, and India to be seen as the best emerging economy in the near future. Every crisis comes with an opportunity. Now, we have all the time to rethink and rebuild our business with a positive frame of mind. We just need to get out of our fear zone and start evaluating and learning new technology which can actually help us to shape our better tomorrow. It has actually helped us analyze that we can be more productive working at home or with less workforce. This crisis has given us time to learn and add new skills to our living. We have learned new hobbies and passed a very memorable time with family. It is very well said by John Green, and I quote, "The darkest night produces the brightest star." This ray of hope and positivity will help all of us to bounce back and achieve many milestones of success. Borrowing is the most expensive form of financing. Code of Conduct for the Direct Selling Agents, or DSAs. Loan DSAs, which is direct selling agents, are those who connect an individual to loan provider, take care of needed documentation for loan application forms, do fundamental checks for application, and ensure that submitted documents are in accordance with the guidelines of the loan provider. The Code of Conduct for Direct Selling Agents, or DSA roles, is a non-statutory code. First, applicability. Code of Conduct for DSAs should be accepted and included as a part of DSA roles agreement between banks and DSA. This code will, therefore, be applicable to all the persons employed by DSA who would be involved in marketing and distribution of the services of banks and financial institutions. Failure to adhere to this requirement may result in permanent termination of business tie-up of the DSA with banks and may even lead to permanent blacklisting by the industry. Second, telecalling a prospect, a prospective customer. Contact a prospect only when a prospect has expressed his or her desire to take a product via bank's internet site or branch or call center, or has been referred by another prospect or client, or through the relationship manager, or is an existing customer of the bank who has given acceptance for receiving calls for other products of the bank. The DSA will not contact those prospects for next 3 months who have denied the offerings. Third, when you may contact a prospect on a telephone. Contacting the prospect must normally be limited to working hours. DSA should ensure that he calls when the call is convenient for the prospect. Fourth, can the prospect's interest be discussed with anybody else? Prospect's privacy should be the first priority of DSA. The interest of the prospect is generally discussed only with the prospect if the prospect has authorized any other individual, family member, spouse, accountant, secretary to be contacted. Fifth, leaving messages and contacting persons other than the prospect. DSA should call the prospect only when the prospect is not available. A message may be drafted for him or her. The objective of the message should be to get the prospect to call back or to check for a convenient time to call again. The formatting of message should be as, please leave a message that AAA, which is name of officer, representing XXX called and requested to call back at ZZZ, which is the phone number. Sixth, no misleading statements or misrepresentation permitted. The DSA will not misguide the prospect on any offered service or product, falsely represent themselves, misguide about the bank and financial institution, make any fake promises on behalf of the bank and financial institution. Seventh, telemarketing etiquettes. Do not make it prior to 0930 to 1900 hours. No serial calling. No calls on the flagged numbers. Identify the do not disturb numbers. During call, DSA should introduce himself or herself. Seek a permission to proceed. Do not force if denied. Rather apologize and disconnect firmly. State valid reason for the call. Never interrupt or argue. Talk in the language that is most comfortable to the prospect. If the prospect plans to buy the product, reconfirm next call and visit details. Provide the telephone number if asked by the customer. Thank the customer for his or her time. Post-call. Never call for the next 3 months to those prospects who denied the offering. Never call those customers who already have enrolled in the same service you are offering. 8th. Visits or contacts precautions. DSA should respect the personal space of prospect. Not enter the prospect's office or residence without his or her wish. Not visit in groups. Respect prospect's privacy. Maintain professional distance. 9th. Appearance and dress code. DSA must dress properly. For men, iron trousers, ironed shirt, keep shirt sleeves preferably down. For women, ironed formal attire, sari, suit, etc. Good appearance. 10th. Handling of letters and other communication. DSA should follow the prescribed format for business-related communications. John Ruskin said, and I quote, "People cannot live by lending money to one another." Unquote. FAQs and terms. Business loan. First, what is a business loan? Business loan is an unsecured loan given by banks or NBFC to customers who don't have any collateral to pledge but require a loan to meet any working capital requirement. End use of funds should be related to business expansion or to meet any sudden requirement which can help the business grow. Business loan is quickest to avail when anyone has immediate requirement with flexible repayment options, and it is customized according to your business need. Second, why should you take a business loan? Business loans can be taken for various reasons, such as if business is experiencing a slowdown, needs funds to ensure cash flow, expand your business to new locations, purchase of new machinery, hire good human resource, etc. No matter what is your need, but induce should be related to business expansion. Third, USP of business loans. Fastest processing. Business loan approval takes only 3 working days if all documents are complete as per norms. Unsecured business loans can be availed ranging from 10 lakh rupees to a maximum of 500 lakh rupees from multiple banks at one point of time. Flexible repayment options. One can choose tenure from 1 year to 4 years. No collateral or security is required for a business loan. It is also considered a goodwill loan. Doorstep service. We will arrange for the documents to be picked up from your home or office. Fourth, who can get a business loan? Any self-employed non-professional can avail a business loan. The customer segment considered under a business loan is as illustrated below. Sole proprietorship, partnership firm, private limited companies, closely held public limited companies, any retailers or wholesaler, manufacturer, service industry. Fifth, what are the eligibility criteria for a BL application? Any self-employed is eligible for business loan if he or she fulfills following norms. Business should be 3 years old. Turnover must be more than 1 crore in last 2 years. Business should be profitable in last 2 years. Should have a good CIBIL score. Should have one ownership proof to sustain the stability of the applicant. RupiaPaisa.com can help you check your eligibility and fulfill your requirement. Sixth, repayment option in business loan. EMI in business loans can be repaid through post-dated checks, ECS, or direct debit from stipulated banks. Tenure can be opted between 1 year to 4 years. A particular date is decided at the time of agreement, and on the same date, EMI gets debited from the account automatically. Seventh, what is the rate of interest on business loans? Business loans, being collateral-free loans, attract a reducing rate, which varies from 16 to 23%. Additionally, it attracts a processing fee up to 2.5% on sanctioned amount. Eighth, why is the processing fee charged? Processing fee is collected on sanctioned loan amounts. Applicants receive a disbursal amount after deduction of processing fee from sanctioned amount. Processing fee is collected to meet initial expenses incurred during sanction of loan, such as verification of office and residence, verification of financial from ITO, verification of bank statement, etc. All this verification is done to ensure no fraud could take place. Ninth, foreclosure charges on business loans. Ideally, there are 6 EMIs locking period in business loans. After 6 EMIs, it attracts foreclosure charges of 4% to 5% on principal outstanding at the time of closure. Foreclosure percentage can be bargained at the time of sanction with help of RupiaPaisa.com. No part payment is allowed in business loans. 10th, unsecured overdraft option. Yes, unsecured dropline OD facility is available from few banks or NBFCs. If any customer doesn't want to take EMI burden or wants to have maximum availability of funds throughout the year, then they can opt for dropline OD. Interest is charged as per utilization of funds. 11th, how interest is calculated on OD? There is a very simple formula for calculating interest on OD. Interest equals amount used multiplied by rate of interest, product divided by 360 multiplied by number of days funds used. 12th, difference between OD and term loan. Term loan. Customer repays the loan in equated installments. Repayment of interest and principal is done every month through EMI, which gets debited from the account automatically. Line of credit. Customer avails loan and uses the same as a DoD with renewal option every year. There is repayment of interest only every month applicable on the utilized amount. 13th, renewal of loan. Customers can avail top-up or get his loan renewed after successful payment of 9 EMIs in said loan. 14th, importance of CIBIL score in business loan. As business loan is collateral-free loan, creditworthiness of applicant is decided on CIBIL score obtained. Higher the score, more chances of getting the approval. A 700+ score is mandatory in almost all the banks or NBFC. 15th, what happens in the situation of EMI bounce? If an EMI is bounced due to insufficient funds, then bank or NBFC will levy certain EMI bounce penalties. In addition, it also gets reported to CIBIL, which may hamper your CIBIL score. Overdue charges are also recovered on number of days delayed from EMI date. Secondly, if the bounce is due to any technical reason, then you should communicate it to the bank or NBFC instantly to avoid any charges. Note: kindly mail your queries at loans@rupiahpaisa.com. Our team will get back to you with the appropriate answer. Loan against property. First, what is a loan against property? As the name suggests, this loan is availed after pledging any of your property as collateral or security to any bank. This is the cheapest way to raise funds and repay in the form of EMI over a period of time. Second, for what purpose is this LAP availed? Loan against property can be availed for various reasons, such as for self-employed, you can use your loan for the following purposes: business expansion, operation usage, debt reconciliation, purchasing raw materials, making new investments and personal use. For a salaried individual, you can use your loan for the following purposes: mortgage buyout or balance transfer of existing loan, consolidation of debt, managing wedding expenses, new investments, financing education. Third, how is eligibility calculated in LAP? There are certain parameters which are taken into consideration before sanctioning any application. Factors taken into consideration is as follows: age norms, income, type of property, property value, existing obligations, if any, stability or continuity of employment or business, past borrowing track record. Fourth, type of property considered for LAP. You can avail a loan against property for the following: self-occupied residential property, rented residential or commercial property, vacant residential or commercial property, industrial property, schools or college, hotel. Fifth, if a property is in joint name, can I take a LAP? Yes, you can take a LAP with the condition that all the owners of property will come as co-applicants on loan agreement. Sixth, how is the valuation of property determined? Bank or NBFC have empaneled a list of value agencies who do all legal and valuation of property. Generally, on one property, 2 valuers give their report and the bank averages out the valuation amount. Seventh, what is the criteria for a property required for LAP? The title document should be clear and free from any kind of litigation. There should not be any existing loan on the same property. All banks or NBFCs have empaneled a legal and valuation team which checks all the title documents and ensures that the property is free from litigation. Eighth, what is the process for sanctioning and disbursing any LAP application? There is 4 stages in application. Submission of documents. There are certain documents which are submitted with banks or NBFCs for their underwriting team to do all due diligence before sanctioning an application. Sanction of loan. After all scrutinization and due diligence based on income, CIBIL score and other parameters, a sanction letter is issued if the underwriting team approves the application. Acceptance of loan. The sanction letter illustrates all the terms and conditions for loan, such as loan amount, ROI, processing fee, tenure, etc. Borrowers accept and sign the sanction letter and other agreement for disbursement of loan. Disbursement of loan. After submission of loan agreement, all the documents related to loan and property are verified, and if the documents are in order, disbursement happens and loan account number is generated for said application for future reference. Ninth, What is the maximum tenure allowed to repay any loan? In loan against property, you can opt for a maximum 15 years to repay your loan to banks or NBFCs. 10th, what maximum loan can I take in LAP? Maximum loan amount is decided after understanding what you need as well as repaying capacity. Maximum loan depends on following factors: the property's registration, the property's market value, your requirement and eligibility, your income and repayment capacity. 11th, how is EMI calculated? EMI is equated monthly installment with principal as well as interest component in it. EMI can be calculated on the basis of loan amount, ROI and tenure opted at the time of availing the loan. EMI calculator is readily available on Google and other platforms. 12th, is there any Flexi EMI plan? There are two options for selecting your EMI on loan availed. Standard EMI plan. Standard EMI plan allows you to pay the principal amount along with the interest consistently for your defined period. EMI amount remains the same for the entire loan period. It is ideal if you have a consistent income. Step Up Flexi EMI plan. Step Up Flexi EMI plan offers great flexibility. This repayment option allows you to pay lower EMI at the beginning of the loan tenure and increase it gradually with increase in your income. This helps to manage income flow efficiently. This is ideal if you expect your income to increase at regular intervals. 13th, is there any fee for applying for a LAP? Yes, at the time of login, 5,000 rupees plus GST is taken against legal and valuation charges of the property. If there are multiple properties involved in one application, then this fee will be applicable on each property. After sanction of loan, the final processing fee of 1% is deducted from the sanctioned amount, in which initial payment is done for legal and valuation of property will be adjusted. 14th, is the rate of interest on LAP fixed or floating? As this loan is taken for a longer period, generally floating rate is applicable, but at the time of availing the loan, one can ask for a fixed rate which needs to be documented in the sanction letter. 15th, how often does the rate of interest change? All secured loans are given at a 18th, is insurance on LAP mandatory? Yes, your property needs to be insured for fire or any other calamities during the tenure of loan. If you have insurance done, you need to submit it at the time of disbursal or apply for insurance with the lender accordingly. The cost of insurance is borne by the borrower of the loan only. 19th, after foreclosure, when will I get back my original property papers? Normally, it takes 7 to 10 working days for any banks or NBFC to return your documents. This document can be collected after a confirmation call or mail from the lender. You need to visit branch for collection of documents. 20th, what is the amortization schedule? Amortization schedule is a chart which shows bifurcation of your principal and interest component in your EMI. It reflects reduction of loan principal by monthly installment. 21st, how amortization schedule is impacted by change in rate of interest? If there is any change in rate of interest, then interest component on loan will fluctuate and following changes will be done to a loan. Change in term of loan. If rate increases, the term will extend, or if rate decreases, the term of loan will get contracted. Change in EMI amount as per increase or decrease of rate of interest. Generally, at the time of agreement, PDC or ECS is given for collection of EMI, which are very difficult to replace at every instance of rate change. Therefore, extension of term is done as a convenient option. 22nd, is the top-up facility available and when can I take it? Yes, top-up can be availed after 12 regular payments of EMI. Banks or NBFCs do their underwriting to check eligibility and end use of the funds and offer top-up on the same collateral. 23rd, what happens in the situation of EMI bounce? If EMI bounce is due to insufficient funds, then bank or NBFC will levy certain EMI bounce penalties. In addition, it also gets reported to CIBIL, which may hamper your CIBIL score. Overdue charges are also recovered on number of days delayed from the EMI date. Secondly, if the bounce is due to any technical reason, then you should communicate it to the bank or NBFC instantly to avoid any charges. 24th, what is pre-EMI interest? In simple words, Ideally, banks or NBFCs have to give 30 days for your first EMI from the date of disbursement, and if there is any further gap of 30 days, bank collect interest for that extra day, which is called pre-EMI interest. 25th. Can any NRI get a loan against property? Yes, a few banks or NBFCs are ready to offer loans to NRI who are working in reputed companies and in countries approved in their list. 26th. Is an overdraft option available? Yes. Most of the banks are offering OD or drop-line OD if the applicant fulfills the OD criteria specified by bank or NBFC. 27th. What are the benefits of an OD facility? A customer avails loan and uses the same as a DOD with renewal option every year. There is repayment of interest only every month, applicable on the utilized amount. There is a very simple formula for calculating interest on OD. Interest equals amount used multiplied by rate of interest, product divided by 360 multiplied by number of days funds used. 28th. Are there any tax benefits on loans against property? Normally, there is no tax incentives on EMI on loan against property availed by salaried people as they have in home loan, but in case of self-employed, they can take benefit of tax deduction on the entire interest paid on loan after establishing end use of loan was business expansion. Note: kindly mail your queries at loans@rupiapaisa.com. Our team will get back to you with appropriate answer. Home loan. First, what is a home loan? The loan borrowed from bank or NBFC for buying a new property or to do any type of construction or renovation on existing property. Second, reason for taking home loan. Loan can be availed for following reasons: home purchase loan, residential plot purchase, home improvement loan, construction loan, home extension loan, HL balance transfer, top-up loan. Third, what is the criteria to decide my eligibility? There are multiple factors which help any banks or NBFC to finalize your eligibility, such as nationality, employment status, income eligibility, meeting age norms, CIBIL score, employment status and stability, LTV. Fourth, why is a co-applicant needed? It is not necessary, but banks ask for a co-applicant in secured loan to add extra security factor to loan in situation of default or sudden demise of main applicant. Secondly, it also helps in increasing the loan eligibility. Fifth, who can be co-applicant and what documents are required? Any of your immediate family members can be a co-applicant, such as spouse, son, father. PAN card and Aadhaar card of co-applicants and income documents to increase loan eligibility are needed. Sixth, what is the process followed by banks to determine the sanction and disbursement? The process followed by banks or NBFC is as follows: login, CIBIL check, eligibility check, personal discussion by credit team, investigation done on all documents submitted, legal and valuation check of property, sanctioned letter, acceptance of sanctioned condition, disbursement. Seventh, what is the maximum tenure in a home loan? Home loans can be opted for maximum 30 years tenure and minimum 5 years. Eighth, can my friend come as a co-applicant? No, only your immediate family member can be a co-applicant. Ninth, what is the maximum number of co-applicants considered for a home loan? It is restricted to 6 and all 6 members should be your immediate family members with good CIBIL score. 10th, is there any fee applicable on a home loan? At the time of login, legal and valuation check of 5,000 rupees plus GST and after sanction up to 1% of the loan amount. 11th, what is pre-EMI interest on a home loan? When your loan is not disbursed completely, banks only charge simple interest on part of the loan disbursed. This interest is called pre-EMI interest. 12th, is there a different rate of interest applicable on a home loan? Yes, one can opt for a fixed or floating rate of interest. In fixed ROI option, the rate remains fixed throughout the tenure, and in floating ROI, the rate fluctuates as bank base rate or repo rate. In NBFC, PLR rate is applicable. 13th, can I change my floating rate into fixed rate or vice versa? Yes, we can get it done by giving a formal request to the bank, and the bank or NBFC do attract a certain fee for changing the rate from floating to fixed or vice versa. Not all banks have this option. 14th, how is repayment of EMI done in home loan? Repayment can be done through various options, such as submitting PDC in favor of the lender at the time of disbursement or signing an ESC mandate for ensuring EMI gets debited from specified accounts. 15th. How often does the rate of interest change? All secured loans are given at floating rate of interest, which is linked with MCLR in bank and PLR in NBFC. The MCLR and PLR is assessed periodically by bank or NBFC after credit assessment, and the revision of rate is done accordingly. 16th. What happens in the situation of EMI bounce? If EMI bounce is due to insufficient funds, then bank or NBFC will levy certain EMI bounce penalties. In addition, it also gets reported to CIBIL, which may hamper your CIBIL score. Overdue charges are also recovered on number of days delayed from the EMI date. Secondly, if the bounce is due to any technical reason, then you should communicate it to the bank or NBFC instantly to avoid any charges. 17th. Is prepayment allowed in home loans? Yes, anyone gets their home loan foreclosed after paying a minimum 6 installments. 18th. Are there any foreclosure charges on home loans? If home loan is taken on personal name and EMI is being paid from a savings or proprietor account, then there is no need to pay any charges as per RBI guidelines. But if repayment is being done from company account, then banks or NBFC may attract foreclosure charges. This can be bargained initially at the time of accepting the sanction letter. 19th. How does EMI or tenure get affected when the rate of interest fluctuates? Change in rate of interest. If there is any change in rate of interest, then the interest component on loan will fluctuate and following changes will be done to a loan. Change in term of loan. If the rate increases, the term will extend, or if the rate decreases, the term of loan will get contracted. The change in EMI amount as per increase or decrease of rate of interest, generally at the time of agreement, PDC or ECS, is given for collection of EMI, which are very difficult to replace at every instance of rate change. Therefore, extension of term is done as a convenient option. 20th. Is there any tax benefit on home loan? Yes. All residents of India are eligible to claim tax benefit on principal and interest on loan as per Income Tax Act. 21st. Is part payment option available in home loan? Yes, we can pay up to 25% of principal outstanding toward part payment in one financial year without any charges. 22nd. How can I foreclose my home loan? Simply by writing a formal letter to the lender requesting foreclosure statement, and after foreclosure, you need to pay total outstanding to get NOC after paying the outstanding. 23rd. Is the top-up facility available and when can I take it? Yes, top-up can be availed after 12 regular payments of EMI. Banks or NBFCs do their underwriting to check eligibility and end use of the funds and offer top-up on the same collateral. 24th. How many days does it take to get back original property papers after foreclosure? Normally, it takes 12 to 15 working days for any banks or NBFC to return your documents. This document can be collected after a confirmation call or mail from the lender. You need to visit branch for collection of documents. 25th. How important is CIBIL score for getting a loan? CIBIL score reflects your credit worthiness and impacts your approval on very serious notes. Applications with low scores have very less or almost nil chance of getting approved. 26th. What is the own contribution mandate in home loan? Own contribution is the amount which the buyer is contributing for buying the property, and rest is funded by banks or NBFC. Generally, 20% of total cost of property should be borne by the borrower, and 80% is funded by banks or NBFC. 27th. What is the amortization schedule? Amortization schedule is a chart which shows bifurcation of your principal and interest component in your EMI. It reflects reduction of loan principal by monthly installment. 28th. Agreement to sell between buyer and seller should be registered? No, but it is advisable to have a registered agreement to sell between